Are your property taxes too high? Are you being overcharged for property taxes? Are you a taxpayer or a hopeful taxpayer to be that has no idea how the tax system works? My name is Jan Dijkers from Berkshire Hathaway Home Services, the Loft Warehouse in Detroit. I'm a real estate broker and a self-proclaimed tax nerd. And in this video, I'm going to break down the property tax system and calculation. It is a little complicated, so feel free to reach out to me with any question. My DMs are open, or look for my contact info at the end of this video. The first concept that I want you to understand is the state equalized value, or SEV. This number is supposed to represent half of your property value, according to the assessor of your municipality. Now, the assessor does not go to Zillow and look up the Zestimate of your home. The assessor does not visit your house every year, and the assessor definitely cannot see inside your home. So this value is just an estimate based on previous sales of similar homes in a specific area over a specific period of time, and then a sort of average is created. Now, the assessor determines what properties to look at to determine this average value of your home by determining a specific economic area. So the assessor determines that your house in your neighborhood of similar homes, all about the same size and value, is one economic area. Now, across the main road outside of your subdivision, there might be a subdivision that has much bigger houses that are much more expensive, and likely that is going to be a separate economic area. So when we look at your economic area, the assessor determines an average for the homes sold, and then they make some adjustments based on square footage, garage, pool, things like that. But ultimately, this is just an estimate. So your actual home value on the market can definitely vary. So the state equalized value can go up or down year to year, depending on if the market is going up or down. And, I'm recording this video in January of 2025. We've seen nothing but up and up and up in most areas in our region. So let's take a look at an assessment history so I can show you an example. This is a property in the University District of Detroit. And so I have assessment history here from 2020 through 2024. It was available through the public record information on my realtor's MLS system. So this is not something that you may have ready access to yourself. So I'm sharing the information with you. So in 2020, the state equalized value, or SEV, was $126,900. That means that the City of Detroit assessor believed this property to be worth around $252,000, or double that amount. Now, as you can see, that state equalized value went up every single year till the last year, 2024, the most recent time the property was assessed, and that state equalized value is $237,600, which is going to give you that the assessor believes the property today is worth about $474,000. So as you can see, most properties increase in value according to the assessor based on the activity in the market. Now, that doesn't mean that this particular property gained that much value in the last 4 years. It could also mean that the assessor has now determined that that economic zone is more in line with the actual market value. So in 2020, the property was probably worth more than $260,000, and now it's more accurately assessed based on current market values. Next, let's talk about taxable value. The taxable value is the amount that your taxes, as in you, the taxpayer, are based on. If you have owned your home for a long period of time, your taxable value may be much less than the state equalized value, which is based on the market value, as we just discussed. That is because the taxable value can only go up 5% a year, or the rate of inflation, whichever is less. So as I'm recording this in January of 2025, Last year was a pretty high year for inflation, at least at the beginning of the year. So we were definitely experiencing the maximum amount of that taxable value increase. So when you buy a property in the state of Michigan, the taxable value uncaps or pops up to be the same as the state equalized value the year after you purchase, which is why if you bought a house from somebody that owned their house for a long time, you may be paying a much bigger tax bill than the previous owner who owned it at that time. So after you purchase, after the taxable value uncaps or pops up to meet the state equalized value, your taxable value at that point can only go up 5% of the rate of inflation, whichever is less. All right, let's look at a real world example. Now, this house is in the Boston Edison neighborhood of Detroit. It sold in 2023. So now I want you to look at the state equalized value. It was worth about $228,000 or double the SEV in 2020, according to the city assessor. By 2024, that number had increased to $209,000 SEV or about $420,000 of market value. Now, if you look at the taxable value comparatively, it has gone up just a percentage of what the state equalized value went up, 5% or less. Now, the sale occurred in 2023. And so that means that in 2024, the taxable value popped up to meet the new assessed state equalized value. And now they are the same. And if we were to take a look at the assessment for 2025, which is coming out later this month, we would see that the state equalized value was probably reassessed again, but the taxable value is only going up that 5% rate of inflation or whichever is less. Now, let's talk about how your property taxes are calculated. So the formula to calculate your taxes in the state of Michigan is millage rate times taxable value divided by 1,000. That equals your yearly taxes. Now, your millage rate is a number determined by your municipal assessor to capture enough taxes for your municipality to pay all the bills and do whatever it needs to do based on all the property values in the municipality. And we can show you, there's a link on the state of Michigan website where you can basically see every single millage rate for every municipality. Now, I will tell you that it's always a year behind, but the millage rates don't vary that much. Let's dig into that formula with real world details. So if we are looking at a formula again, let's look at a real world example. If I wanted to calculate the taxes for that Boston Edison property, what I would do is I would take the taxable value. Let's put that number right up here, $209,700. We multiply by the millage rate. The millage rate in Detroit is about 68.5. I'm going to divide by 1,000 and I get about $14,000. Now, your municipality, on top of that, is going to add some administrative fees, trash, maybe water. They all do it a little bit differently, but the main tax calculation is the same, and that will give you the number for your yearly taxes. And that is how you calculate the taxes for the home that you currently own. Now, if you want to see what your taxes would be if you're going to buy a home, then we always want to use the state equalized value instead of the taxable value because of that uncapping or popping up. So I thought we would look at a property that is currently on the market for sale. The property address is 90 Edison, and it is currently on the market in the Boston Edison neighborhood for $685,000. as of the time of this recording. Now, here is the way that the taxable value and the state equalized value shakes up. So in this case, we are going to use the state equalized value of $287,800 to determine what the taxes could be if we bought the property. So In this case, I'm going to replace the millage rate with that 68.5. I'm going to replace the state equalized value with 287,800. I'm going to divide by 1,000, and my yearly tax bill before adding on the trash fee is going to be about $19,700. Now, I do want to mention the city of Detroit and these properties that I've been discussing does qualify for a tax abatement called the Easy Homestead. And I will be discussing the inner workings of that in a later video, so subscribe for more information. Now, as we can see from the example in Boston Edison of the property that sold in 2023, if we had used the 2023 state equalized value to calculate our taxes, it still would have gone up a little bit further in 2024. So if you really want to deal with worst case scenario of what the taxes will be on the property that you were thinking of purchasing, then what I would recommend is this. Take the purchase price of the property that you are considering buying. In this case, for 90 Edison, the asking price, $685,000. Divide that in half to get your worst case scenario state equalized value. Multiply by the millage rate, 68.5, and divide by 1,000. So we are going to take, in this case, half the listing price, $342,500. We're going to multiply by the millage rate of 68.5, divide by 1,000, and I'm going to get about $23,000 a year in maximum worst case scenario taxes. Now, if you are not comfortable with the worst case scenario tax bill, then this is not the house for you. You have to be comfortable with whatever the worst case scenario is, because I would never recommend taking a chance that your taxes are going to be less. I would always calculate based on the worst case scenario. If you want to know if your property is overassessed, find your state equalized value from your last summer or winter tax bill. It will be on there. It's probably listed as SEV, and then double that number. If that number is more than what you believe your home is worth, you are most likely overassessed. Now, as a side note, if you have the NEZ tax abatement, you have to add the SEVs from both bills together and then double it to determine that. Now, look out for the notices from your assessor in January. They send out a yellow piece of paper every January. They all look the same no matter what municipality you live in. And at the top, it will say, "This is not a tax bill." Take a look at that SEV, because that is what your property will be assessed and potentially be what your tax bill is based on. So there's also an opportunity to appeal your assessment right after that yellow notice comes out. Now, if you just bought your property, this is the very best time to appeal. So don't miss this opportunity. The yellow notice will detail how and when you are able to appeal. Every municipality has a different process and appeal period, so make sure you read it and appeal if you think that you are overassessed. If you have any questions, shoot me a DM, follow me on Facebook or Instagram, or email me at jan@theloftwarehouse.com. I am happy to answer any of your questions. And if you're a tax nerd like me and want to be notified of important dates related to property taxes, text Tax Nerd to 313-362-4080 for free property tax text alert, where I send out these very simple but important notifications every year. Thanks so much for watching. If you're getting value from these videos, subscribe and like. See you later, tax nerds.